Hi, this is David Skrika, and again, going to talk about a couple trades here before we start our special presentation. Uh, but I guess I'll talk about the market itself and a trade that we just did. What's interesting about the market right now is we look at everything. We look at what are the smart people telling us? And I don't mean the people that get on CNBC or Bloomberg or whatever. A lot of them have to talk their own books. They work for brokerages, and it's in their best interest to always be bullish. But the people who are independent, the people who have to make money for their subscribers. Well, one is Carl Icahn, who's been one of the most famous hedge fund managers on Wall Street for years, and his fund that trades on the market, Icahn Enterprises, is now 150% net short. And when Icahn began warning about the market last year, he was actually 4% net long. So this is really, really interesting that, and he owns 90% of this. So he's obviously putting his money where his mouth is. So, we've seen this. And then we've seen Stanley Druckenmiller, who used to trade for George Soros and now has his own fund. And now it's just a family-traded fund. But Druckenmiller is warning that similar themes that I've been warning about: stock buybacks, cheap money leading to huge dislocations, and that really hitting the market. And then George Soros, earlier in the year, warned that China was in a huge asset bubble, which was going to blow, and this would lead to a decline in stocks. And then we have other major problems here, like today the Italian banks are down a lot because they have huge write-downs and bad loans. And we look at Deutsche Bank, and Deutsche Bank, which was $50 in early 2014, is now down to $16, and looks like it's going to be, this company could be in a death spiral because of all the derivatives and bad loan exposure. And Deutsche Bank is one of the largest banks in the world. And the difference, remember, between some of these European countries is this bank is so big, it's difficult for German or Italian governments, because the countries are smaller, to bail out their banks. Remember, Germany has 80 million people. The U.S. has 330 million people and a much larger tax base and resources. And that's going to be a major, major problem if they have to bail out Deutsche Bank. So there's so many things that could happen. And I think with the cheap money, with companies doing buybacks and the whatnot, we're going to need some kind of trigger. Maybe banking crisis in Italy, banking crisis in China, Deutsche Bank blowing up. But finally, the realization that the shale, companies have huge losses that they have to write down. Something like this has to happen, I think, for the market to really, really fall a great deal. Because otherwise, there's so much money being pumped into buybacks that, we're just seeing that propping up these stocks in the short to intermediate term. Like, you look at a company like 3M, their revenues are lower than they were 3 years ago, yet the company is near an all-time high, is at an all-time high of 170, because it's just doing it's borrowed a huge amount of money to do buybacks and keep their dividend, which is totally unsustainable. But in the short term, it can keep the stock kind of propped up. Okay. So we look at that, and then we look at, but this is where the buybacks will ultimately lead when things really turn. Macy's had a huge buyback over the last few years, but then when their business really began to deteriorate, the stock has dropped from 71 to 32. So this is why the buybacks don't work in the end. If you don't invest in your business, if you don't have a quality business and the whatnot, this is where ultimately this all leads to, like something like a blow up, like in Macy's. So that's where it'll lead ultimately, right? So this is why, we're short the market. We bought a few new funds to short the market, and then we're offset it by being long, like I mentioned in the last video, either companies that are beaten up and I think have chances to move. I talked about Bombardier in the last video, or we're long we're long gold and precious metals companies and the whatnot, because they are coming out of, in my opinion, a huge base building and bottoming build. And you can really see it if you just look at the HUI. This is a chart, first of all, going back about 5 years to 2011. And you can see that's the huge bear market. And this is a very long bear market. It was over 4 years. And then the breakout. So you can see the great base here. And note that on all these declines, essentially, we just kept having lower highs and lower lows. Well, this is the first time we've kind of broken through that. So I would think that here, sometime, we're very overbought. We could pull back on the HUI to work off this overbought position. We're in the seasonally weak period, but I definitely think this is the start of a big move to the upside. So, maybe the HUI pulls back to 200, maybe to 190 at most, and then goes higher. If we look at the HUI in its last move out of a bear market, you can see all these pullbacks, and they look like nothing, but these are quite large pullbacks. They're 15 to 20%. This was actually a 25% pullback here, right? So, and it's similar that you have this huge move right off the bottom. So I think that you could definitely see that. But again, we're in this longer term move higher. And the bear market in the HUI and gold stocks was more similar to the bear market of the late 2000s. If we look, the HUI, by the way, was only affected in 97, so we can't see it going back to 96. Or 96, sorry. Yeah, so we can't see it. It went from 200 to 35. And note, similar pullback, long years and years, and go look what happened. So we could see this kind of pullback here. The HUI basically doubled here like it's doubled recently, pulled back roughly about 20%, and then base, and then broke out again. So I could definitely see something like that scenario happening here, in the short to intermediate term. We can see this pullback, but I think ultimately we will be headed higher. And this is, after a long bear market like that, you're going to see probably a pretty good move to the upside. But what I try to do is you look for the sectors that have fallen a lot, are basing, and then I look for the stocks and the sectors I think that can underperform. Like an interesting sector to me right now, and I don't have any stocks recommended in this yet, is coal. You can see the coal ETF has been decimated. The American production has been decimated. But obviously, the election result could change that. And, on any pullbacks here, I'm probably going to look at coal because I think we've overshot to the downside. I know coal is not going to play as large a part in the future, but it's still going to play a part in global energy production, okay? And so I guess I'll just leave it at that. So again, if you like this philosophy that we have of, picking undervalued companies, being very patient, waiting for companies to fall a great deal. And then if you like the opposite is looking for companies in industries where they're going to lose market share or companies that have terrible balance sheets and this sort of thing to short, then I think you'll like our philosophy. And the nice thing about the gold stocks moving right now is it was very difficult for me to find longs. I was picking away at the gold stocks in 2014-15, but now I think that in 2016 we're going to want to do that, right? We're going to want to, now that the gold stocks have turned, we can participate in the rally in them, and I can find new companies that are beaten up and can move in that bull market, where when gold was still basing over the last 2 years, it was more difficult to do because they weren't moving to the upside. But anyhow, I'm going to leave it at that, and we're going to talk later. And everybody take care, and again, we'll speak later. And then sign up for our service. Basically, the basic offer is $349 for a 4-month subscription, or $699 for the year. We give trading updates. We give buy and sells. We give updates and options, trading options. We give up, obviously recommend stocks. And actually, a new thing I'm starting is I'm doing private placements myself in the gold market, and I will show you the private placements I'm doing, and you have the opportunity to do those as well. Okay. So I hope you like all these aspects of our service. If you're looking, again, to buy beaten up assets, short overvalued assets, even if you're just on the buy side, our service, I think, is good for you. So everybody take care, and I hope you enjoyed this video.